Welcome to While We Were Distracted, the podcast where we explore topics that often get overshadowed in the rush of daily life. Please take a moment to like and subscribe. It really helps.
Sometimes the story breaks and it redraws the tech map overnight.
Yeah.
And we're definitely looking at one of those moments today. We're going to take a shortcut to understanding this huge move in the AI infrastructure game.
The big one.
The big one. The announcement of this massive multi-year strategic partnership between Amazon Web Services, AWS, and OpenAI.
It's honestly a deal of, well, staggering scale. If you're watching the compute arms race, this is AWS really stepping back onto center stage, kind of declaring, look, we are absolutely open for business at the AI frontier.
Right.
And the number you need to get your head around right away, the big headline figure, OpenAI's commitment to use AWS. $38 billion.
$38
billion.
Wow. I mean, that number is not just big, it's a statement.
It absolutely is.
So our mission today, it feels critical. We need to look past just the huge dollar sign.
Get underneath it.
Exactly. Why is it so important strategically for both Amazon and OpenAI? What does it tell us about the, frankly, astronomical amount of compute needed for next-gen AI?
Yeah, the scale is just mind-boggling.
And how does it shake up the whole cloud market, especially, given the questions AWS has been facing recently?
It's definitely more than just a giant cloud sale. It's about a foundational commitment. It shows how AI capacity is being designed, engineered, really guaranteed globally.
Okay.
And it kind of proves that, despite all the rivalries and the noise, when you get down to the nuts and bolts of building AGI, well, everyone needs to play together on some level.
Okay, let's start with the details. The nuts and bolts. This isn't some short-term thing, right?
No, not at all. The sources are clear. Multi-year, strategic. It's set to grow continuously over the next 7 years.
7 years.
Yeah. OpenAI needs immediate guaranteed access. They need to run and scale their core AI stuff. And AWS is, well, they're moving incredibly fast on this.
Speed seems key here.
Speed is definitely the word. Capacity deployment starts like right now. But the target to get this whole massive build out done before the end of 2026.
Wow.
With room to grow further into 2027 and beyond. So it's not about just finding spare capacity. It's custom engineering this reliable runway for whatever comes next in AI models.
So what does $38 billion actually buy you in terms of hardware? It's definitely not just standard servers in a rack somewhere.
Not even close. Not in the same league. AWS is essentially custom building an entire environment for OpenAI.
Oh, yeah.
And the core of it, they're Amazon EC2 Ultra servers.
Ultra servers.
Yeah, these aren't your run-of-the-mill cloud servers. They're highly specialized, very dense networking environments. Think of them as the scaffolding for the real power, which is hundreds of thousands of state-of-the-art NVIDIA GPUs, specifically the GB200s and GB300s, the latest and greatest.
Okay, so specialized servers, the powerful GPUs.
Yeah.
But what's the tech leap? Why Ultra servers specifically? Why are they needed to connect all those chips?
Yeah, good question. It really boils down to latency.
Okay, speed of communication.
Exactly. How fast the chips can talk to each other. When you're training a model with hundreds of billions, maybe trillions of parameters, every chip needs to communicate with every other chip almost instantly.
Right, no bottlenecks.
Precisely. So the AWS setup here, it's sophisticated. The GPUs are clustered using these ultra servers all on the same super low latency network. It basically eliminates those communication choke points that would just kill a massive AI training job.
So the architecture itself is like a competitive advantage.
Definitely.
And the sources say this setup is flexible, right? It's not just for one type of AI work.
Absolutely. They design these clusters for versatility. They can handle inference that's, serving up ChatGPT answers to users every day. But crucially, they're scaled for training the next generation models. That's where, honestly, probably 99% of that $38 billion in raw compute power is going to be aimed.
Okay, now here's something I found really interesting. GPUs get the spotlight, right? But this deal also talks about scaling to tens of millions of CPUs. Why does cutting-edge AI need that much standard CPU power as well?
Yeah, this is super important. It's a real insight into where AI is headed. That massive CPU scaling, it's specifically designed to handle agentic workloads.
Agentic workloads. Explain that a bit.
So the industry thinking, and OpenAI is clearly betting big on this, is moving beyond just chat. Agentic AI is where the AI acts more like a personal assistant,
Okay.
It navigates the web for you, performs multi-step tasks, pulls together info from lots of sources, does complex automation, that kind of web-heavy multi-step stuff. It needs huge amounts of distributed CPU power just to manage the workflow and the environment.
So it's not just the AI brain, but the whole system to go out and do things online.
Exactly.
And Sam Altman's quote, it really hits it. Scaling frontier AI requires massive, reliable compute. Seems like the absolute baseline.
It's the table stakes. Non-negotiable. So if that's what OpenAI needed, then the flip side is, what's in it for Amazon? This $38 billion deal, it's way more than just revenue. It's a massive, endorsement for AWS's cloud business, especially after, that period of skepticism they faced.
The skepticism might be putting it lightly. I mean, sources said investors were calling Amazon an AI laggard, right?
Yeah, that term was thrown around a lot.
Because they didn't have that flashy chatbot like ChatGPT, and maybe seemed a bit slower with their own big language model compared to, say, Google or Microsoft.
And that perception, it had real effects. AWS, traditionally the absolute king of cloud, saw its market share dip down to 29% as of September this year.
Wow, 29%.
Yeah, that's down from 34% just before ChatGPT really took off back in 2022. Rivals like Microsoft and Google were aggressively going after those big AI deals, and it showed.
But I mean, was that laggard label totally fair?
Right.
They were funding Anthropic pretty heavily, right?
Mm-hmm.
One of OpenAI's main competitors.
Oh.
And developing their own chips like Trainium. Wasn't it maybe just a different strategy, more diversified?
That's the tension, exactly. They were diversified, but in the, let's call it the attention economy of AI right now, they lacked that one huge headline-grabbing partnership that screams, we are central to the absolute cutting edge.
Right.
This deal, that's their answer. It proves they can build and run custom infrastructure at the very peak of demand.
Okay, let's put the $38 billion in context there, because the scale of spending across the board here is just wild.
It really is. I mean, when you look at their rivals, the numbers get even bigger.
Yeah.
Microsoft, obviously, OpenAI's main backer, talked about a potential $250 billion commitment over time for using Azure.
$250 billion.
Yeah. And even Oracle, they signed a $300 billion deal with OpenAI, too.
So wait, if you just look at the numbers, $38 billion for AWS looks, smaller than those massive figures from Microsoft and Oracle. How do analysts spin that as a win for AWS?
Right. It seems counterintuitive. But it's about signaling capability and intent. Analysts see this deal as a really crucial, successful, key first step.
Ah, a foot in the door.
Exactly. A foot in the door with a company, OpenAI, that's projected to spend maybe upwards of $1 trillion on compute over the next decade.
$1 trillion.
That's the kind of number being talked about. So for AWS, this $38 billion is proof they can grab a slice of that frontier AI market. It breaks the idea that Microsoft Azure has some kind of exclusive on OpenAI, and it instantly boosts their cloud momentum.
And it's not like AWS was just sitting around waiting for this deal either. They were building capacity already.
Absolutely. Remember Project Rainier?
Vaguely, yeah. The Indiana data center.
That's the one, an $11 billion AI data center. And that capacity is specifically being used to train Anthropic's models using Amazon's own custom Trainium chips.
Okay.
And, don't forget the groundwork already laid. OpenAI's open weight models, they were already available on Amazon Bedrock earlier this year.
Right, Bedrock, their AI platform.
Yeah. And that initial partnership was working. It made those models popular with thousands of AWS customers. Companies like Comscore, Peloton, Thomson Reuters were using them for all sorts of things. Code generation, even those agentic workflows we talked about.
Okay, so that existing collaboration, it kind of leads to the other side of this whole thing.
Yeah.
Why is OpenAI, whose main supporter and investor is Microsoft, why are they committing tens of billions to Microsoft's biggest rival, AWS?
It's probably the clearest sign yet of how incredibly, entangled the whole AI industry has become.
Entangled, yeah.
I mean, look at the players OpenAI is now deeply partnered with. Amazon, Microsoft, Google, Oracle, NVIDIA, AMD. It's like a who's who. This isn't about picking sides anymore.
It's about performance and capacity.
Exactly. It's about getting the best performance and ensuring they have enough capacity, period.
So it's a deliberate strategy then.
Yeah.
Spread the load. Don't rely on just one provider. Build this sort of distributed AI system across different clouds.
That's precisely the core driver. You just can't run a frontier AI company relying on a single source for compute. It's too risky. Analysts confirm it. OpenAI's strategy is all about limiting dependence on any one cloud provider. It mitigates risk, it guarantees supply, gives them flexibility on pricing. As one expert basically said, they're deploying with pretty much everybody at this point.
Because the demand is just that huge.
The demand for compute is just too immense for any single vendor to satisfy right now.
But this competitive codependence,
Yeah.
doesn't it feel kind of risky? I mean, we just said AWS is backing Anthropic heavily, one of OpenAI's biggest competitors.
Yeah.
And Amazon and Microsoft are both pouring money into building their own AI models to compete directly with OpenAI.
It's true.
Aren't they basically bankrolling their competitors' infrastructure? It feels unprecedented, maybe even a bit weird.
It is a phenomenal contradiction. It really is. And it means both sides have to trust that the sheer, overwhelming need for compute kind of overrides those normal competitive instincts. In this specific race, right now, the company that can deliver the needed infrastructure today wins the business, full stop, regardless of what happens competitively down the road.
So performance trumps rivalry.
Performance, scale, and security. That's why OpenAI goes to AWS. Amazon has this unusual experience, as one source put it, in running these absolutely massive AI infrastructure projects securely and reliably. We're talking clusters with over 500,000 chips.
Wow.
That kind of operational know-how, you just can't ignore it when you're trying to build the future of AI.
It's like the ultimate pragmatic decision then, in a market where scale is everything.
Pretty much. Hashtag, tag, outro.
Okay, so if we're trying to boil this down, what are the key takeaways from this deep dive? The essential nuggets.
Yeah. Let's recap.
First, obviously the sheer scale, $38 billion. That number itself is a massive signal.
Huge signpost. Yeah.
Second, the specific tech being built. It's geared towards that future of agentic AI, using those top-end NVIDIA GB200s and GB300s, all linked by those specialized ultra servers.
Right, the hardware matters.
And third, what this means for AWS. It really feels like a watershed moment for them, signaling they've grabbed back some serious momentum and credibility in that cloud war, despite, those recent market share dips.
Absolutely, regaining ground. And stepping back even further, the financial side of all this spending, it's just massive and frankly kind of unprecedented.
How big are we talking?
Well, the sources project that companies could spend upwards of $500 billion, $500 billion, just between 2026 and 2027 on AI infrastructure. And that's just in the U.S.
$500 billion in 2 years. Just on hardware and data centers for AI. That's an enormous amount of money.
It is. And that figure, it just forces the question, doesn't it? Is this incredibly rapid, massive infrastructure build out and these kind of weird financial deals where your customers are also your competitors, is it maybe a sign of an AI bubble forming?
The bubble question always comes up.
It does. But the counter argument is strong, too, that big tech, these frontier startups, they've crunched the numbers. They genuinely believe they need this capacity, and they see a clear path eventually to turn all this compute into profitable services that, change everything.
It's definitely the highest stakes CapEx race tech has ever seen.
No question. So, okay, here's the final thought we want to leave you mulling over. It connects these huge spending commitments back to the future shape of the industry.
All right.
Given that multi-cloud is clearly becoming a necessity, OpenAI needing both Microsoft Azure and Amazon's AWS, what does that tell us about where AI power will end up?
Concentration or diversification?
Exactly. Will the sheer need for compute dilute the power of any single cloud provider, forcing this kind of diversification? Or will these massive deals just solidify things, ensuring that only, say, 3 or 4 giant cloud companies remain the viable partners for anyone wanting to build frontier AI?
Yeah, that's a really interesting question to track as this compute race just keeps accelerating.
Something to keep an eye on.
Definitely. Well, that's it for this deep dive. Thanks for joining us.
See you next time.
Don't forget to like and subscribe for the next episode on While We Were Distracted.